We are seeing how the entire cryptocurrency market has reached a critical level. At a critical level where we clearly see how major institutions have injected a significant bearish force into the market. This is not only evident with Bitcoin, but also with Ethereum and a multitude of altcoins. So, what can we expect next? As you know, on a daily time frame for Bitcoin, we are working on a bullish accumulation process in which major institutions have already obtained their profit. As you're observing, smart money has led Bitcoin to the level they've been seeking for a long time. Hence, the theory we've been working on at Crypto Insight is to expect a deceptive bullish climactic action. A deceptive bullish climactic action that is already starting to unfold. On the one hand, we will give great importance to this event, to this bullish climactic action that has reached the institutional target of a macro bullish accumulation process. This trap is ultimately preventing the price from going higher. And you already know our directional preference for medium-term analysis, but that doesn't mean that if we zoom in and take a closer look, we won't be looking for trading opportunities in this case, to the upside. We analyzed certain trading opportunities oriented towards establishing long positions. In Bitcoin, basically, we were looking for a trajectory like this. In Ethereum, it's true that we expected a small pre-market trap. To initiate the movement, we were looking for that bullish direction. And in Cardano, when we were at this base of the bearish channel, we were also looking for an upward trajectory. And I'm explaining this to you because, of course, on a macro level, we are analyzing a situation and a context that suggests betting on a bearish direction. But markets don't move immediately. Meanwhile, if we zoom in on the charts, even though we have a bearish preference for the medium term, we are able to identify opportunities to go long. It makes sense to wait for this break of the creek, whether for a small stretch or to reach those levels that may precede the fall. Hey, it would be another thing if they never did, but let's bet on it. Let's bet on it. Let's bet on what I'm telling you. So we're going to bet a little on that, and here we'll be identifying these defense zones, for example. Well, context of why not bet on that long? Why not bet on that long? At least until the creek. In the end, it defends us something small, and let's see if they offer us this stretch or even takes us further. Let's go a minute and see what we see here. Well, here they've already made the double impulse. It's already done. Here, they've already set a creek for us. Here we have the stop volume. Here we have absorption, and initiation of purchases, which interests us a lot. Absorption. We're in a minute. It's very aggressive. As I said, with a very tight stop loss below the defense zone. And why not bet? We already see how, but bet on at least this stretch. Expect a sweep. Place your entry where the stop loss would be and look for the stretch and look for the macro stretch, really. Bitcoin justifies it. You understand? And in the end, this is based a lot on mean reversion. On that market need that often returns to the mean. Hence, extremes are always so interesting, hence why we always seek them, because it brings countless benefits. We're in 5. This is nothing more than a proxy. I've already told you, it's just a proxy. Let's go to money, see what we find there. But it won't be much more of our interest beyond being a proxy, or even, look, find any excuse to go long with the position protected. Remember that in Crypto Insight videos, what we do is a more oriented technical analysis. In the medium term, we also look for specific trading opportunities in much shorter time frames. We don't mind looking for opportunities both long and short, scalping, intraday trading. Meanwhile, we can be recording YouTube videos talking about a medium-term unidirectional trend. That's why in the live session we did last Monday, we only looked for long operations. Perhaps tomorrow we'll only look for short operations. The market will decide that. And simultaneously on YouTube, we offer you an advanced medium-term technical analysis. Now you're looking at the Bitcoin chart in its hourly time frame. See how Bitcoin is at a crossroads. As on one hand, we see how it's being compressed quite clearly against a relevant macro level, which is not only compressing it, but has created a trap scenario where the major institutions, I have no doubt, have trapped the longs. And now we continue working on this structure. A structure that, if you notice, and from a somewhat more micro perspective, is also compressing the price against the future breakout trend. What catches my attention a lot, and for that, let's zoom in a bit, is the recent bullish market trap that has given all the energy and strength to the market to start this bearish move. What you're seeing now in Bitcoin, you can also see it here in Ethereum in a rather exaggerated way. Look, see how they clearly and maliciously set the level for us, then come and trap, and we know when they trap. when they catch the longs. The energy the market offers then is to give continuity to the downside. But look at the curious thing, as here we have Cardano in its hourly time frame, and while it's true we're working on a somewhat different price structure, since in the case of Cardano, we argue that this bearish distribution process is causing a follow-through to this alpha angle of work that is pushing Cardano down. Well, that structure, as you are observing on Tuesday itself, generated a structural trap for us. If we go here, as we will, to Mon, you can see how in Mon we observe this compression with a trap, not just one, but even an escape that comes with a valid signature and then pushes the price down. Honestly, the cryptocurrency market has offered very good trading opportunities not only on Monday, but also on Tuesday with these bullish traps. As soon as we become aware that we don't have a crystal ball and reduce our ego a bit, it will only be then that these trading opportunities will appear. And now, continuing with Polkadot, here you should notice how the price came to find a very relevant structural level, which they did not hesitate to work on in a distribution process. If we get a volume profile of the entire distribution process, we identify the point of control at the price level of $8.51, this red line. And look, after the strong bearish impulse to which the price is correcting us, it came to visit the point of control in a very harsh, raw, and immediate way, compressing us on the structure, distributing us, and the rest is history. At the end, what these sellers are telling us is, my friend, here we have a bearish preference for the medium term. But remember, we don't only rely on the medium term, we also rely on the short term and the immediate term. Now, take a look at Polkadot, since if we were saying that both Bitcoin and Ethereum have set a trap for us to later recover, we have also seen that Cardano, in a structure similar to Polkadot, has indeed set that trap, not once but twice, to then recover and drop. Here we see how Polkadot, unlike others, has held its ground and has not created any kind of trap scenario. In other words, on Tuesday, Polkadot assumed the role of the market's macro proxy. Essentially, Polkadot was telling the crypto ecosystem, friends, let's not believe in those structural breakouts, as Polkadot is not flinching even an inch in the face of the clearly active high-frequency algorithms. And now I'm going to share with you what we think will happen with the crypto market in the short and medium term. But before that, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Look at what we are seeing on the Cardano chart in its hourly time frame. For me, frankly, it's crucial to see how this entire distribution process is holding the price above this structure, and more importantly, how the crypto ecosystem has clearly defined a structural level, which in the case of Ethereum, we find at the price level of $25.80, and how they recently set a trap for us. Honestly, this could be a prelude to us not taking too long to look downward, and this compelling force is capable of defending its entire distribution. Therefore, we would go in search of that bearish replica. In the end, the perspective never changes, at least for the moment. If not, I'll let you know, don't worry, but it remains bearish. So let's question whether this trap is already going to be the grand prelude, the big warning, to generate that movement. But hey, we have to be cautious. Let's monitor a trend line similar to this one, as this bearish impulse, if it wishes, could seek a complex corrective pattern that goes for a Z, which in my opinion, if they want to do it, they will. From the trend line I just drew for you to break the creek, look for an aggressive Z because not over structures, and that would indeed be the final point to turn the market into something much larger. Pay attention to what I'm telling you in the end. It's not about having a crystal ball, but knowing how smart money moves the markets. That's why I emphasize this trend line. It can be a potential catalyst for Z searches before a collapse. However, if you see that this structure already collapses, it would mean that the trap would be final to seek the expected movement. I hope this is clear and understood. Certainly for altcoins, the fact that we have experienced this strong bullish impulse and that it has come to test the origin of the breakout of an entire distribution process is not at all positive for trying to be bullish in the medium term. How is it not? Ask yourself the following. How is it possible that all this bullish force has come to contact such a relevant structure and has received rejection as a response? It's a bit strange, don't you think? Well, it is true that in the case of Cardano, we come from a micro trap in this hourly time frame, and yes, on one hand it could be like a final trap, but as I mentioned earlier, it would not surprise me in the least if we find ourselves facing such a structure, where large institutions eventually collapse to go look for a creek located higher up, generating a feeling that we break to the upside of the bearish channel, signaling to the market that we are long. But in reality, they would be absorbing positions to make the opposite move. Note that this extension could be somewhat deeper, not just to seek excess above that level. We can witness all these types of events. In the end, it could be the search for a bullish institutional target to end the party, and then these people remind the world where we are headed. But as you know well, Bitcoin and Ethereum led the market, and that forces us to think that perhaps with this, we have already had enough, and then it might be time sooner rather than later to look for a strong climactic action, although I would doubt that it is to reverse the price upwards. But honestly, I would expect this bearish continuation after deceptive breakouts. This is my big bet on Cardano. And before moving on to the Queen, Bitcoin, let's take a look at Polkadot. Consider if the origin of the breakout wouldn't be enticing for Polkadot investors. In the end, for one reason or another, we might experience those classic trap scenarios, either to come and find this micro creek or to create a scenario of, hey, it looks like we're going to the sky. But fundamentally, we are aiming for an institutional target that aligns with the origin of the breakout, and then we can continue this downward bearish impulse. Remember? The upward stretch is currently the most complex to anticipate. What do I mean? That the preference of this analysis is undoubtedly bearish. This is when we need to assess and look for opportunities during the course of the movements, as they can execute the move in various ways. We don't have a crystal ball. That's why we need to know through cross-analysis what makes more sense as the price unfolds. But one thing must be clear: what is the idea and why? As for Bitcoin, as mentioned, we have just experienced a market trap that has caught our attention, as it could be that deceptive catalyst before seeking a strong and representative event for the crypto ecosystem. But, as I mentioned a moment ago, ultimately, this tiny trap doesn't entirely guarantee being the final catalyst for the bearish movement. That's why I showed you the technical analysis of other cryptocurrencies, which you can easily use as a proxy for future crypto movements. In the case of Bitcoin, it makes sense that before looking for the bearish movement, they may want to go after the institutional target of this compression. Whether to find this structure, seek some liquidity, but it would be in the final stage before the continuation of the bearish trend that crypto financial markets are so eagerly anticipating. Remember, your main proxy will be Ethereum, as it will tell us whether they want to pursue that aggressive Z or not. Now tell me, what are your thoughts on this? For the medium term, do you think we're going strongly upward, or are you more on the bearish side? Share your opinion in the comments. And if you like this advanced technical analysis, let me know in the comments as well. Additionally, give the video a thumbs up, subscribe to the channel, and click on the bell icon so that YouTube notifies you of future posts. Wishing you successful trading, and until next time.